Hello traders. I haven't done a video for a while. Probably been about a month. At any rate, I thought I'd make one today, and I am seeing quite a few negative divergences on the MACD divergences on the Dow Jones Industrial Average sectors, suggestive that this market rally into earnings season is very weak. So be very careful on initiating new long positions at these levels. In my opinion, I think there's a lot of downside risk going into this quarter's earnings. Okay, so with that being said, give me a second here. Okay, I'm going to go through some of these charts, which I'm seeing some negative divergences, and then you guys can get an idea on them. U.S. delivery services. Okay, that's like your UPSs and FedExes. We're getting a higher high here, but we've got a lower low on our MACD right here. This one here isn't quite as broad, visible as some of the ones I'm going to show you here. The aluminum index here, we're back to highs, but we're coming off of a lower low on our momentum indicator on our MACD. Our automotive sector here, automotive parts, we're back at the highs already, and we reset our MACD at our lower level. Now here's one that's really showing a negative divergence. We flattened out on our signal lines for quite a while now, and now we're actually getting a negative rollover on our signal lines, even though price continues to go higher. And this is Media Agencies Index. Broadcast and entertainment. This is like your ESPNs and stuff. Uh, well, ESPN's owned by Disney, but you know that type of stuff. We flattened out on our momentum indicators, slightly going lower, even though we're putting in higher prices. So this is a clear negative divergence. Building materials and fixtures continue to they flattened out on our momentum indicators, okay, but we continue just to get higher and higher uh, prices on this. So this is getting extremely lofty on your building materials index. Your basic materials index, we're getting lower lows here on your MACD, but you're getting higher highs on price. Another clear divergence. Your basic materials index, given the same situation. Your gambling index is giving a negative divergence, but this actually looks more like a bull flag, and the MACD is resetting for another move higher, in my opinion. Your commodities chemicals index is giving yourself a negative divergence here. It could actually be bull flag setting up for another flag higher. This one here is not very as clear. This one here is really clear. Travel and leisure index. It's really showing some negative divergence on your MACD, even though we're putting in a flag. So this right here is actually looking like it could be setting up for, because your RSI is not overbought, setting up for another leg higher, in my opinion. This here is another one of your chemical indexes giving a negative divergence. Your coal index has been on fire this year, even though last year it just got destroyed. We are getting a negative divergence, even though we're putting in a higher high here. So the top might be in, or awful close to being in here. Your MACD is showing it's starting to roll over here on this index. It's still early for the indicator, but it's the personal products index. So this is more of a retail-based index. Here's another constructions and materials index where the MACD indicator has flattened out and now is turned lower, even though price continues to go higher. So there's a lot of risk in the construction space and housing, in my opinion. You got yourself a negative divergence on your packaging, containers and packaging index. So another specialty chemicals index with a negative divergence. And here's another consumer services index. Is a really clear negative divergence going on here, which could possibly be bull flagging. So we'll see what happens. Okay, your electronics components and equipment index, some of your semiconductor stuff, it's showing some negative divergence here. Your okay, same thing. Wait a minute. Your financial administration index. Uh, we're breaking out the new highs here, and we're getting off of a negative divergence on the MACD, suggesting it's not supportive of the move. Your industrial machinery index is given a negative divergence, suggesting Caterpillar, Joy Global, those kind of stocks are not support. The technicals aren't supporting the move. U.S. home furnishings index. Our MACD is showing momentum's drying up, and this index, the technicals aren't supporting the price action. Your food producers index has a really clear negative divergence going on here, as money is being moving, as preparing to move out of consumer staples, it seems. Another is food products index. So another consumer staple showing a clear negative momentum divergence. Your small caps index momentum seems to be feigning off on the small cap index, even though price continues to go higher. Your general retail index, your MACD is rolling over here, despite the fact you're getting higher prices on retail. Your home construction index, negative divergence, even though price has recently put in a newer higher high. Your durable household products like your Whirlpools putting in a negative divergence despite higher price. Your general household goods index is putting in a negative divergence despite trying to put in higher prices. Your home improvement retailers like your Home Depot and your Lowe's, we're starting to see negative divergence on your momentum despite higher prices. Your non-durable household products have been in a 2-month negative divergence going on with this, and this is like your Clorox and your Palmolive and those type household goods. We're starting a negative divergence in the healthcare providers like your Anthem or your Humana. We're seeing a negative divergence in commercial vehicles and trucks index. And I want to mention also Hertz today came out today and announced that their revenues are going to miss. So they pre-announced earnings already. So it's another good reason for this to go lower. Now there are a whole bunch more that I could show you, but it just takes more time than I have for my video. But anyway, if you go to stockcharts.com and if you want to do research on your own, you type in $DJUS and then show all results, and it'll give you a listing of all the different Dow Jones sectors that you can look at and find those negative divergences on your own. And then when you come to the bottom here, there are several pages. There's 5+ pages of different sector indices that you can research through and sort and figure out which ones are showing negative divergences and stuff. Okay, so I just want to let you guys know about that. Basically, from what I can tell, we got well over a third of the indices right now showing negative divergences, and that's the highest I've seen since last August or so, that we had that type of situation going into earnings season. So I suggest being very careful on the long side, playing this earnings, because the markets are anticipating that the companies have lowered their earnings expectations so low that they're going to do like they typically do, is easily beat the expectations, which may or may not be the case. So just be careful. The average price per earnings right now is 17 to 18 times, which is historically very high. So you are paying quite a bit of a premium on these stocks, especially if earnings come in light this quarter. So that's all I got to say. Good trading, and be careful. Thank you.